It seems the market is about to get a new gold producer. This development follows Newmont's continued sell-off of non-core assets within their portfolio following their 2023 acquisition of Chriz Mining. The latest transaction will see Discovery Silver become a producer of gold. The deal, which will see the establishment of Discovery as a producer approaching mid-tier status with 285,000 ounces of production a year, is predicated on a large financing package from Franco-Nevada, which will introduce a new royalty to the asset. Let's dive in. Okay, let's start from the top. Discovery Silver has agreed to purchase the Porcupine Complex from Newmont in a transaction valued at $425 million US. The deal will see Discovery pay $200 million in cash up front, while also issuing $75 million in stock upon closing. The remaining $150 million will be paid on a deferred basis, with Discovery to pay $37.5 million annually beginning at the tail end of 2027. While Discovery is obviously known for their silver asset, it appears one of the leading arguments for the purchase is that the management team of the company has their roots in the Timmins region, where the Porcupine Complex is located. CEO Tony McCooch happens to be from Timmins, and has also served as general manager at Hoyle Pond, which is one of the mines that makes up the complex. For shareholders, Discovery has said that the transaction is accretive, because when does a company actually say otherwise? And that it will establish a producer with excellent value creation upside, which is expected to come from operating performance, development projects, and exploration potential. Oh, and it also provides diversity to Discovery's portfolio, which provides leverage to both gold and silver prices for shareholders. Although that leverage to silver somewhat requires Discovery's Cordero project to actually get up and running now that the company is classified as a producer. All right, so what exactly is the Porcupine Complex? The asset currently consists of multiple mines, including Hoyle Pond, Paymore, and Dome, all of which are found near Timmins, as well as the Borden underground mine near Chapleau, Ontario. The complex also includes the milling facility at the Dome mine. Production currently comes from the Hoyle Pond, Paymore, and Borden assets, while the Dome mine was placed into care and maintenance back in 2017. That mine, however, still contains close to 11 million inferred ounces of gold, with Discovery said to be planning to assess the potential for resumption of mining. Mineral resources across the project are estimated as being 3.9 million measured and indicated ounces at a grade of 1.76 grams per ton gold, while inferred resources total 12.5 million ounces at 1.53. Collectively, the complex has a net present value of about $1.2 billion at $21.50 an ounce gold using a 5% discount rate, which nearly doubles to $2.3 billion at $26.50 gold. The operation is currently estimated to see annual production of 285,000 ounces of gold over the next 10 years, while over the entire remaining 22-year mine life, 4.9 million ounces of gold are expected to be pulled out of the ground. This production is estimated to come at an all-in sustaining cost of $1,504 per ounce over the remaining mine life, while the company provides an AISC estimate of $1,278 per ounce for the years 2030 through 2035. Why those random years were pulled out as a highlight, however, is anyone's guess. For reference, the first 3 quarters of 2024 saw the mine produce 219,000 ounces of gold at an average all-in sustaining cost of $1,422 an ounce while under Newmont's ownership, making it one of Newmont's lower-cost operations. So the numbers don't sound like they are wildly off. All told, after-tax free cash flow over the next 10 years is estimated at $1.3 billion, while that figure sits at $1.8 billion for the remaining life of the mine. Capital expenditures, on the other hand, are expected to total $854 million from 2025 through to 2030, with sustaining capital estimated at $110 million a year. The remainder sees $122 million allocated to development expenditures, largely attributed to the open pit project slated to be completed at Paymore this year, and $69 million in exploration. All right, this is all well and good, but how exactly is Discovery doing the deal? Well, they just did a deal with the devil. Just kidding. The entire transaction is supported by a $555 million US financing package, which is largely backed by Franco-Nevada. All told, Franco is committing up to $449 million for the deal, which largely consists of some royalties and a term loan. The first aspect to this deal is a 4.25% net smelter return royalty that Franco is buying up in exchange for $300 million. The NSR will come in 2 tranches, with the first consisting of a 2.25% NSR that will exist in perpetuity for all minerals produced at Porcupine. The second tranche, meanwhile, consists of a 2% NSR, which will be in place until the equivalent of 72,000 ounces of gold have been paid out to Franco on this specific tranche. Alternatively, that second tranche can be bought out by Discovery in exchange for a cash payment equal to a pre-tax annual IRR of 12% on a $100 million attributable purchase price. The second aspect to the deal with Franco is a $100 million secured term loan, which can be drawn upon within 2 years of the purchase of the complex closing. If drawn on, the debt will bear interest at a rate of the 3-month SOFR plus 450 basis points. The facility contains a 7-year maturity with amortization of 5% per quarter after year 5. The loan has also some upfront fees associated, including 2% on any principal drawn and the issuance of US $1 million in 3-year common share purchase warrants. The third aspect to this arrangement is that Franco will serve as a lead order in a concurrent $155 million bought deal financing. The bought deal, which consists of subscription receipts that will convert to common shares, will see Discovery raise funds at 90 cents a share. Franco has committed to purchasing 47.9 million in shares here, which will bump up to 49.4 million if the overallotment is exercised. Franco has agreed to a 2-year lockup on the shares as part of the deal, while in exchange obtaining a right of first refusal on future streams and royalties, and the right to purchase a 2.25% perpetual NSR on certain adjacent claims should Discovery acquire them in the future. Outside of Franco, Discovery has also secured $9 million in commitments from their executive team. On a post-closing basis, Franco-Nevada is expected to hold a 9.9% interest in Discovery Silver. Newmont, meanwhile, is expected to hold about 15.6% interest, which is based on the issuance of about 120 million common shares as part of the transaction, and 771 million common shares being outstanding once the dust settles. Current Discovery shareholders, meanwhile, are expected to hold just 51.9% of the resulting company as it currently stands, which as a result means that the entire transaction requires shareholder approval to proceed as it currently stands. The company, however, has already locked in support from about 35% of the shareholder base. The deal is currently expected to close in the first half of 2025. Okay, folks, this is getting a little long in the tooth, so let's wrap it up. For Newmont, this transaction just represents another opportunity to divest an asset it deems as non-core. This brings total proceeds from such divestitures to $4.3 billion since the start of 2024. So just another asset for them. In exchange, they get some cash, some deferred consideration, and a decent stake in the future of the asset without having to worry about operating it themselves and all the challenges that come with that. For Discovery, and in particular CEO Tony McCooch, it's an opportunity to create a brand new gold-producing company at a time when gold appears set to run on geopolitical uncertainty. And with an asset this size as one of the first producing assets added to the portfolio, it seems hard to go wrong here. All right, everybody, thanks for watching. If you enjoyed this content and you want us to cover other stories, let us know in the comment section. Also, if you haven't, maybe give it a like, share it within your mining communities. All right, everybody, thanks for watching.